Hello everyone. Today in the second lecture of company final accounts, we'll discuss the effects of all the adjustments. Look at your question number 1 of your study material. As it is given in the question, write the effect of following adjustments in financial statements as per Companies Act 2013, and you can see 16 adjustments are given to you. So all of you in your notebook make 4 columns: serial number, transactions, effect in profit and loss statement, and effect in balance sheet. Pause the video and make these columns. So all these 16 adjustments or transactions we will see in detail how to give the effect in profit and loss statement and how to give the effect in balance sheet. Pause the video and make these columns. I hope you all are done with the formats. Now be attentive. First adjustment is closing stock of raw materials on 31,324 lakhs, means closing stock of raw materials. One effect we will minus from consumption of raw materials. How do we find consumption of raw materials? Opening stock of raw material plus purchases minus closing stock. So we will minus from consumption of raw material. Had it been a closing stock of finished goods, then we would have subtracted in change in inventories, opening stock minus closing stock. This is closing stock of raw materials, so minus from consumption of raw materials. And second effect in balance sheet, we will show it under the heading inventories. Okay, we'll show it, it will be shown in inventories. It will be shown in inventories under current assets. Okay, in current assets under the heading of inventories, we will show closing stock of raw material. Now, outstanding manufacturing expenses we will add in manufacturing expenses, and that manufacturing expenses will come under the heading of miscellaneous expenses, which will again come under the heading of other expenses in profit and loss statement. Okay, within profit and loss statement, last heading is other expenses. In that we write miscellaneous expenses. In miscellaneous expenses we will add in manufacturing expenses. And second effect, it will be shown in other current liabilities. Okay, under the heading of, it will be shown in other current liabilities under the heading of current liabilities. Within current liabilities we have the heading of other current liabilities. Exactly same way, outstanding salaries we will add in salaries, and salaries will come under administrative expenses, and administrative expenses will come in other expenses. And second effect, again we will show it in other current liabilities under the heading of current liabilities. All of you must understand both the effects properly, because these are the adjustments generally which we will have when we solve the practical questions. Outstanding printing and stationery, exactly same way, plus in printing and stationery. Okay, plus in printing and stationery under administrative expenses, and again that administrative expenses will come in the category of other expenses. And second effect, again outstanding, so it will be shown in other current liabilities under the heading of current liabilities. Then depreciation on fixed assets rupees 6,20,000. So we will show it in depreciation and amortization. Okay, in profit and loss statement we'll show it in depreciation and amortization, and in balance sheet we will minus from tangible fixed assets under the heading of non-current assets. Okay, purchases include 25,000 worth of goods distributed amongst valued customers. So what two effects will we give for this? By mistake it's included in purchases, so we will minus from purchases. We'll minus from purchases. Now where will we minus from purchases? If it is purchase of raw material, then you'll minus it in purchases in consumption of raw materials, or if it is purchase of finished goods. Okay, or if it is purchase of finished goods, then you'll minus from direct purchases. We'll minus from direct purchases of finished goods or stock in trade. And second effect, both the effects will come in P&L statement itself. You will add in advertisement expense. Okay, you'll add it in advertisement expense, which will be coming under the heading of selling expenses, and selling expenses will come in the category of other expenses. So within other expenses, under the heading of selling expenses, you'll add in selling advertisement expense because it is goods distributed to customers, and because it is wrongly included in purchases, will minus from purchases. If it is purchase of raw material in the question, you'll minus it from purchases in consumption of raw materials. If it is purchase of finished goods in the question, you'll minus from direct purchases of stock in trade. There's a separate heading in P&L statement, purchase of stock in trade. Provide for taxation 25.17%. So one effect we will minus from profit before tax, and second effect we will show it in short term provisions, which will come under the heading of current liabilities. Then directors propose the following appropriation of profit. As you can see, appropriation of profit is mentioned. So transfer 20,000 to general reserve. Will show it in appropriations, and appropriations is deducted in statement of retained earnings. We have discussed it in past lectures that statement of earnings, how do we find? Opening balance of P&L statement plus current year's profit minus appropriations. So in that appropriations, we will minus it in statement of retained earnings. Okay, this effect will be subtracted in statement of retained earnings. And second effect, we will plus in general reserve under the heading of reserves and surplus. Okay, we'll plus in general reserve under the headings of reserves and surplus, which comes within the category of shareholders' funds. The authorized share capital consists of 10,000 equity shares of rupees 100 each. This is a disclosure in balance sheet. Disclosure means within share capital we have to write authorized capital and double underline it. Okay, what is the relevance of double underline it? So that it is not included in the total of balance sheet. Claim of 46,000. So this is not an adjustment which requires two effects. Okay, we just have to show it as disclosure in the share capital. Claim of 46,000 for workers' compensation is being disputed by the company. It will come in contingent liabilities and commitments. It will be shown in contingent liabilities and commitments. We studied them in detail in the last lecture under footnote. Okay, a footnote means after the balance sheet, we will write contingent liabilities and commitments. That's why it is called as footnote, and in that we will show this claim disputed by the company. Long-term loan from SBI is secured by hypothecation of building will again be disclosure. Disclosure means we will write this information in bracket. We will write this information in bracket in loans. In long-term borrowings, okay, in long-term borrowings, we have to show this disclosure. We have to write this extra information in bracket. Sundry debtors include 4,000 debts due for more than 6 months. This is also disclosure, which we will write in trade receivables. This disclosure will write in trade receivables. In bracket will not write, but as an extra information will write that these much are the debts due for more than 6 months. What is the amount of other debts, and then the total debts we will write in outer column. Interest on debentures for the half year ended 31st March 20 was due on that date. So one effect we will show it in finance cost. Okay, one effect we will show it in finance cost. We will plus in interest. Okay, we will plus in interest on debentures in finance cost. And second effect we will show it in other current liabilities under the heading of current liabilities. Okay, we'll show it in other current liabilities under the heading of current liabilities. Next, the company has contracted for the erection of machinery at 2 lakhs, which is still incomplete. This is incomplete long-term contract, so that is contingent liability and commitment. We'll show it in contingent liabilities and commitments as footnote. Okay, as footnote below the balance sheet, we'll show it in contingent liabilities and commitments. Market value of investment is rupees 75,000 is a disclosure. We have to write in bracket in investments, non-current investments. In non-current investments, under the heading of non-current assets, we have to give this disclosure. So in bracket, we'll write this extra information. Where we write non-current investments, in bracket we'll mention market value is rupees 75,000. Directors have proposed a final dividend on equity shares 12% and provide DDT 20.56%. This will also be shown in contingent liabilities and commitments. Okay, contingent liabilities and commitments as footnote. Okay, it will be shown in contingent liabilities and commitments as footnote below the balance sheet. So this is how we have to give the effect of all the 16 adjustments. Now if you look at question number 2, how will we solve this? Understand, question 2 will make you clear with the adjustment of provision for tax and advance tax, gross tax liability. How do you deal with that? In the long questions, you'll understand it with the help of question 2. So all of you go through that thoroughly well, be attentive. The trial balance of BOSS Limited as at 31st March 2020 shows the following items. Now, advance payment of the income tax will come in balance sheet under the heading of short-term loans and advances. Okay, advance payment of income tax will come in balance sheet under the heading of short-term loans and advances. Now, total amount is 2,20,000 and they say including 1,40,000 of previous year. Okay, they say including 1,40,000 of previous year. Out of 2,20,000, 1,40,000 is of previous year, means we can say that remaining 80,000 is of current year. Out of 2,20,000, 1,40,000 is of previous year, means remaining 80,000 is of current year. Provision for income tax for the year ended 31/3/19. Now see, this is ending 31st March 20. And this is provision for income tax of 31/3/19, means it is last year's amount. Last year, we already created a provision for tax of 1,20,000 for the current year payment of income tax. Okay, you have studied in income tax subject previous year and assessment year. So in the previous year 18 to 19, we created a provision of 1,20,000 for the income tax payment of current year. And profit and loss account of 1,419 is rupees 1 lakh, that is opening balance that will come in statement of retained earnings. Now what are we supposed to do? We will see in detail when we make the ledger accounts and formats. Further information are as follows. Gross tax liability for the year 19 to 20 amounts to rupees 1,52,000. So you studied that previous year 19 to 20's assessment year is 2021. Means last year's tax liability has come to 1,52,000, which in totality we are supposed to pay by the year 2021. And make it no effect for the same has so far been given in accounts. So obviously we are supposed to give the effects for the same. Provision for income tax has to be made for the year 19 to 20. 19 to 20 means current year. For current year we have to make a provision for 128,750. Okay, 19 to 20 is the current year, and gross tax liability for 19 to 20 means this is the assessment year. So you can say previous year would have been 2018 to 19. Last year's tax liability is 1,52,000, which we are supposed to fulfill in current year. And in current year, we have to make a provision for income tax of 128,750. Profit before tax for the year 19 to 20 means current year is rupees 5 lakhs. Now what all we are supposed to do? You are required to prepare provision for income tax account, advance payment of income tax account, gross tax liability account, and then also we have to show how the relevant items will appear in profit and loss statement, not account, it should be statement, and balance sheet of the company. So all of you pause the video and make these formats. First of all, provision for income tax account around 3-4 lines, advance payment of income tax account around 3-4 lines, and gross tax liability account around 3-4 lines. Okay, first we'll understand the answers A, B, C, how to make provision for income tax account, advance payment of tax account, and gross tax liability account. Thereafter, we will see how will we show the things in P&L and balance sheet, and then I will make you write the notes. That in long questions, we are not going to make these ledger accounts. So directly from trial balance and adjustment, how to give the effect in long questions, I will make you write it in the notes at the end. First, we understand the complete concept in detail. Then we will write the notes. How to remember to give the effects in long questions. Okay. Pause the video and make this formats fast, everyone. I hope you all are done with the formats. Now understand how to make provision for income tax account. Very first of all, this 1,20,000 is the opening balance of provision for income tax. It is a credit balance, so write on credit side by balance brought down 1,20,000. Okay, 1,20,000 is the credit balance of provision for tax account. So you all will write it in provision for tax account on credit side. Why balance brought down 1,20,000. Now see, against 1,20,000 we provided in last year, tax liability of last year has come to 1,52,000. So can I say that we had provided less amount in the last year? For the last year, previous year 18 to 19, assessment year 19 to 20, our tax liability has come to 1,52,000. Means we are supposed to pay 1,52,000 to the income tax department. But for the same amount in the last year, we created a provision of 1,22,000 only. So against 1,52,000, we created a provision of only 1,20,000. Means there is a shortfall. How much less provision was made? 32,000. That now we will have to provide from the current year's profits. So write down by profit and loss account 32,000. Okay, that we will have to provide from current year's profits. Suppose instead of 1,52,000, it was 1,12,000. I repeat, instead of 1,52,000, it was 1,12,000. Just suppose. In that situation, you can say we have created excess provision. We provided 1,20,000, but liability has come to only 1,12,000. So we will withdraw 8,000. Withdraw 8,000 means in the ledger account, same entry would come on the debit side to profit and loss account 8,000. I hope everyone is clear with both the situations. Here our liability is 1,52,000. We created a provision of 1,20,000. We created less provision. There is a shortfall of 32,000. So that shortfall of 32,000 will provide from current year's profits, credit side by profit and loss account 32,000. But suppose the provision for tax 1,20,000 and tax liability was only 1,12,000. That means in that situation we have already created excess provision. There is no shortfall. We have created excess provision of 8,000 that we can withdraw from the profits of current year. So that we would write it in provision for tax account on current debit side. To profit and loss account we would withdraw 8,000 rupees. In the situation if the amount was less. Now here what will happen? After creating this provision of 1,52,000, okay, we will set it off against tax liability. So on the debit side to gross tax liability account, we'll adjust this amount against gross tax liability, 1,52,000. So it will become a squared up account. It will become a squared up account. 1,52,000 will be the total of both the sides. Okay, what do we do now? This 1,52,000, because it is the tax liability of current year, we transfer this amount of 1,52,000 from provision for income tax to gross tax liability account. I hope everyone is clear with the provision for income tax account. Opening balance 1,20,000. Tax liability has come to 1,52,000. So further in the current year we provide the amount of 32,000 difference, and then 1,52,000 we transfer to gross tax liability account. Now, advance payment of income tax, everyone understand it. First of all, there is a debit balance of 2,20,000. So all of you write down on debit side, to balance brought down 2,20,000. Okay, there is a debit balance of 2,20,000. So every one of you write down on debit side, to balance brought down 2,20,000. Now, against this, 80,000 is of current year advance tax and 1,40,000 is of last year. Now against 1,40,000 of last year, tax liability has come to 1,52,000. Okay, against 1,40,000 advance paid of last year, tax liability has come to 1,52,000. So what you will do is 1,40,000 you again adjust it against gross tax liability. Last year's advance tax, again you adjust it against gross tax liability account. What amount? 1,40,000. And 80,000 becomes the balancing amount. Okay, 80,000 becomes the balancing amount. 2,20,000 minus 1,40,000. 80,000 is by balance carried down. Okay, 80,000 is by balance carried down means we will show it in short-term loans and advances. We'll be showing this amount in short-term loans and advances. What amount? 80,000 only. Because so this short-term loans and advances, we don't have to show 2,20,000. 1,40,000 is already paid in advance for the last year. This year's liability has come to 1,52,000. So against that 1,52,000, we will adjust this amount of 1,40,000. And still, how much amount is paid in advance for the next year? Only 80,000 rupees. So 80,000 will come in short-term loans and advances. Out of 2,20,000, 1,40,000 advance tax of last year, we will transfer to gross tax liability account, and remaining amount of closing balance will come in short-term loans and advances. Now, gross tax liability account, how will we make understand this? First, you transfer this. What did we transfer in gross tax liability? 1,52,000. So in gross tax liability, it will come on the opposite side, credit side. By provision for tax account, 1,52,000. Okay. Opposite effects I am giving. In provision for tax account, we had written on debit side. Okay, in provision for tax account, we had written on debit side to gross tax liability account. So same thing we will write in gross tax liability account also on credit side by provision for tax account 1,52,000. In the same manner, advance payment of income tax we had written on credit side by gross tax liability account 1,40,000. So that will again come in opposite side in gross tax liability account debit side to advance tax account 1,40,000. Now understand this. Against 1,52,000, we have already paid advance of 1,40,000. So balancing amount. What is the balancing amount? Balancing amount is 12,000. That is still payable. So that is the closing balance. This will appear. This closing balance will appear in other current liabilities. Okay, tax payable of 12,000. The amount which is still payable 12,000 will come in other current liabilities. Suppose advance tax paid was more. Against 1,52,000, the advance tax paid was, let us say, 1,60,000. In that situation, this remaining 160 minus 52, 8,000 would have been shown in other current assets. The balance would have been shown in other current assets. That would show income tax refund receivable. Against 1,52,000, if you would have already paid 1,60,000, then 8,000 instead of other current liabilities would appear in other current assets as income tax refund receivable amount. Okay, here against 1,52,000, we had paid only 1,40,000. So remaining 12,000 still payable will appear in other current liabilities. Now understand how will we make profit and loss statement. Okay, all of you pause the video and make this small profit and loss statement of 3 lines. See, already in the question, profit before tax is given 5 lakhs. I am directly starting with profit and loss statement from the last portion, end portion, last 3 points. In profit and loss statement, which are the last 3 things we write? Profit before tax, minus provision for tax, and profit after tax. We just have to show the relevant effects, so only that much portion we will make. Profits before tax are already 5 lakhs given in the question. Okay, profits before tax are already 5 lakh rupees given in the question. From that we will subtract provision for tax of current year. Now see in the adjustment, what is the provision for tax we have made for current year? For the current year we have to make provision of 128,750. This is for next year's tax payment. Okay. In trial balance, what is given is last year's provision for tax which we are supposed to pay in current year. In the adjustment, what you are given is current year's provision for tax which we are supposed to pay in the next year. So 128,750 current year's provision for tax we will minus over here, and then what will be profit after tax? 5 lakhs minus 128750. 5 lakhs minus 128750. 371250. This will be profits after tax of current year. Now, how will we make statement of retained earnings? Understand it. First, we will start with opening balance of profit and loss account. First, we will start with opening balance of profit and loss account. So that is given in trial balance. Or if you see in trial balance, what is the opening balance of profit and loss account? Already given to you. 1 lakh rupees, you all can find this. So first you all write opening balance of profit and loss account 1 lakh. Now from that we have to minus. First we have to plus current year's profit. Current year's profits after tax. What did we get current year's profit after tax? 371250. This is what we will add over here. Okay, current year's profit after tax 371250. So total amount available for appropriation is 471250. From that we have to minus shortfall of provision for tax of last year. What was the shortfall of provision for tax of last year which we provided from current year? 32,000. That we will minus in statement of retained earnings. 32,000. So what is the amount of balance that will be carried forward to balance sheet? 471250 minus 32,000. 439,250 will be the balance carried forward to balance sheet. Okay, this will be the balance carried forward to balance sheet. Now, how will we show the effects in balance sheet? Everyone understand it? Very first in shareholders funds. Very first of all, in equity and liabilities, in shareholders funds. Okay, within equity and liabilities, in shareholders funds, we will show in reserves and surplus. In the note of reserves and surplus, we will show within the note of reserves and surplus, we will show profit and loss statement balance. What amount? This 439250. 439250. We are just showing the relevant effects in balance sheet. We'll be writing these amounts in the notes later on when we solve full-fledged question. So 439250, this amount, okay, will come directly in reserves and surplus. Okay. After that, further effect will take place in the third note of current liabilities. In the third note of current liabilities, within current liabilities, other current liabilities. Within current liabilities, other current liabilities. Okay, in other current liabilities heading, we will show this, which amount? 12,000. Tax payable of 12,000, gross tax liability of 12,000 will show in other current liabilities. Tax payable 12,000. Then, so these are the effects we have to give on liabilities side. Now, further asset side, no effects are to be given. Short-term loans and advances, we have to show this advance tax. So in asset side, under the heading of non-current assets, current assets, under the heading of current assets, in short-term loans and advances, we will be showing advance income tax. What amount of advance income tax we will show? Only current year's amount of advance income tax. That is balance of this 80,000. This 80,000 we will be showing in current assets in short-term loans and advances. So these all effects will be showing in balance sheet. Okay. Now, after solving this question, what things you have to remember from long questions point of view, understand it properly. Okay, first thing what you have to remember is, in trial balance, whatever advance tax is given to you, in trial balance, whatever advance tax is given to you, from that, current year's advance tax will come in short-term loans and advances. Okay, first thing what you have to remember is, in trial balance, last year's advance tax will have no effect. In trial balance, current year's advance tax, okay, current year's advance tax will be shown in, these all effects now you have to remember from long questions point of view, will be shown in short term loans and advances. Is everyone clear with that? Last year's advance tax will have no effect. Only current year's advance tax is to be shown in short term loans and advances. Last year's advance tax will have no effect. Okay? Last year's advance tax will have no effect. Remember that. Why? Because it gets adjusted with gross tax liability of last year. Now, second what you have to remember is, okay, from trial balance, provision for income tax and advance tax of last year, both you compare with gross tax liability. We do it one by one. Last year's advance tax. Last year's advance tax be compared with gross tax liability. Okay, last year's advance tax be compared with gross tax liability. Now, two things are possible. What two things are possible? If gross tax liability is more, if gross tax liability is more, then difference amount will be shown as tax payable. Then difference amount will be shown as tax payable in other current liabilities. That is what we had in this question. Difference amount will be shown as tax payable in other current liabilities. What did we have in this question? Advance tax of last year 80,000. Okay, advance tax of last year 1,40,000. Tax liability 1,52,000. So difference amount 12,000. Is it appearing in other current liabilities or not? Yes. So if gross tax liability is more, than difference amount will be shown as tax payable in other current liabilities. If advance tax is more, means we have already paid more tax than our liability. If advance tax is more, then difference amount will be shown. Okay, if advance tax is more, then difference amount will be shown as refund receivable, tax refund receivable in other current assets. This I discussed with you orally. If we have already paid more advance tax, then you will show income tax refund receivable in other current assets. Okay, so either you will show it in other current liabilities if gross tax liability is more, or you will show it in other current assets if advance tax is more. What you are supposed to do, advance tax of last year, you are supposed to compare it with gross tax liability. Then third note what you will remember is, even provision for tax, this 1,20,000 last year, you compare it with gross tax liability, like advance tax. Okay, last year's provision for tax, this all we have to directly remember from long questions point of view, because we are not going to make the ledger accounts. So last year's provision for tax be compared with gross tax liability. Now here again two situations are possible. Okay, last year's provision for tax be compared with gross tax liability. If gross tax liability is more, just like previous thing, if gross tax liability is more, means we have created less provision in the last year, then shortfall will be deducted in statement of retained earnings. Shortfall will be deducted means we will provide that amount in the current year, so it will be deducted in statement of retained earnings. That is what we have done in this question. Okay, gross tax liability was 1,52,000. Provision was only 1,20,000. So what did we do with this 32,000? We have subtracted that in statement of retained earnings. And if provision for tax is more, means we have already created more provision than needed. If provision for tax is more, we have already created more provision than required, then excess amount, okay, then excess amount will be added in statement of retained earnings. We will withdraw it back, so we'll add it in statement of retained earnings. Okay, I am discussing even the situation which are not covered in the above question but can come in your long question. So both the situations I am discussing. What you are supposed to do, last year's provision for tax, again you compare with gross tax liability. If gross tax liability is more, then you deduct it in statement of retained earnings shortfall amount. If provision for tax is more, then excess amount you add it in statement of retained earnings. Okay. So these are the things what you have to remember, and other than that anything remains in P&L account? No. Current year's provision for tax you simply have to minus from profit. We have already discussed the two effects over here. Current year's provision for tax we have to minus from profit before tax, as well as show it in short term provisions under current liability. So this also will appear in balance sheet actually. I'm sorry, one more item will appear in balance sheet over here. Which item will appear in balance sheet over here? In after other current liabilities it will come in short term provisions. Okay, in short term provisions we will have provision for tax, current year's provision for tax, provision for tax of current year. What is the amount of provision for tax for current year? Current year's provision for tax is 128,750. So that will appear in short term provisions, 128,750. Okay, so this I have forgot, all of you write it down. This will also come in balance sheet. So we are not writing it in the notes, we are just writing the effects of last year's amounts, what all are to be given. Current year's advance tax will be shown in short term loans and advances. Last year's advance tax will have no effect. Now what you are supposed to do, last year's advance tax as well as last year's provision for tax, you compare it with gross tax liability. When you compare last year's advance tax with gross tax liability, if gross tax liability is more, then you show it in current liabilities, we have to pay the difference amount. If advance tax is more, you show it in other current assets, refund receivable, we have to receive it back from income tax department. When you compare provision for tax of last year with gross tax liability, if gross tax liability is more, that means we make less provision. So shortfall you will minus in statement of retained earnings and provide in current year. If provision for tax is more, means we have created more provision, we'll withdraw it. So excess amount you'll add it in statement of retained earnings, showing it as withdrawal from profits of current year. So these are the effects what you have to remember. Okay. So that'll be all for this lecture. Next lecture will be starting with the full-fledged long questions. Bye everyone. Take care. See you in the next lecture.